Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. A fourth bearish black crow yesterday and a continuation of the original move down from the traditional bearish 2-day meeting line pattern formed over last weekend. Yesterday the market opened below the congestion area around 91.60 to 92.26. Now within this congestion area we have the late July to date, currently at 91.81, broken downtrend and made it part of the June to August roof or half diamond pattern, which interestingly was the high for the day as well. However, the main feature was the market punching down through the long moving average, currently 91.41, and then closing well below it after halting at the lesser Fibonacci line at 88.67. This is the second consecutive row in a week that prices have punched down and closed below the long moving average. This time it was at the end of the week rather than at the start of the week. This has left us with some interesting actions and patterns. Now my first thought was that the August to September action might be a triple bottom of some form, but I'm not happy about the idea. Then that the February to date action might be some sort of form of head and shoulders pattern. However, I'm not keen on that idea either, not just yet. However, the action over August to December does look like a possible inverted cup with handle pattern. Now I'm going to ponder this one a little more before and if I expand upon the idea. Now so far today, a slightly higher open and a dip down towards that same lesser Fibonacci line at 88.67. However, the market shot back up and has halted unsurprisingly at the rising long moving average right now. At the moment this looks like a reactionary bullish harami, actually a sizable one, and also a possible pipe bottom, so just keep your eye on that one. LME 3-month aluminium. A second bearish black crow and a follow-on lower to yesterday's mouthful of a immediate countering bearish dark cloud cover pattern and bearish double as well. Up until yesterday the market had looked none too happy about cresting the recent bullish wave. Well, it seems to perhaps be getting a bit more than that, just being unhappy. I previously pointed out how we've had a pattern build up over the last 3 weeks. Oh, and by the way, the pattern build up, I mean patterns build up. More than one. These patterns could be one or more or none of the following. A possible bull flag stroke bullish halfway hesitation. A possible horn top. And finally a possible small pennant pattern. Friday last week we had a significant, and again it's still a possible one, but a significant bearish belt hold pattern. However, we'd initially had a limited follow-on lower to what is usually seen as a strong bearish pattern. All this added up in its own way to a, and I quote, "It's still too early to tell for sure, so we'll stay in an indecisive type of situation." Well, yesterday was the first real test of that idea. The market tested down to the base uptrend, currently at 28.43, of the possible small pennant pattern. It was pierced, but prices pulled back to close on the congestion at 28.60. This is the first real test of a pattern in recent times, and it's definitely one to watch. So far today, a test up and down, and looking right now like a possible indecisive spinning top. However, please note, we have today again pierced the base uptrend of the possible pennant pattern without any significant follow through lower. If we see much more of this, and we may see this pennant actually change and morph into a descending triangle, so watch out for that. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.